To BQ Prime, a very good afternoon to all the viewers. I'm Hiral Dadia, and this is the earnings season as we know. And Polycab is the one which did report numbers, clearly a 26% uptick in terms of revenues, a good jump that we've seen with regards to profitability, and the margins have spiked as well. Let's welcome in our guest, Gandharv Tongia, CFO at Polycab India, to discuss more in terms of how the numbers have panned out and what's in store going ahead. Gandharv, good afternoon and welcome to the show.
Good afternoon. Thank you for having us.
Always a pleasure to speak to you. Gandharv, overall, good uptick in terms of top line, bottom line. Margins have improved as well. What has worked according to you in this quarter?
It's actually a culmination of several initiatives. As you know, around a couple of years back, we embarked on a transformation journey by the name of Project Leap, wherein BCG is helping us. We used to have an annual turnover of around 9,000 crore rupees in fiscal 21, and we thought that getting to 20,000 crore rupees by fiscal 26 would be a great ambition to have. And as a result of that, we have taken several initiatives, both on B2B, B2C, enablers, and so on and so forth. And this quarter, we have achieved a top line of close to 4,200 crore rupees, bottom line of 430 crore rupees, and this is the best ever quarterly performance as far as profitability is concerned in the history of the company. On the B2B side, the growth is in the vicinity of 30% as far as volumes are concerned in the domestic market. Exports has also registered a growth of almost 14% on sequential quarterly basis. And it looks like that with the help of government and private capex, the same momentum will continue in the quarters to come.
Right. So overall, the growth with regards to FMEG, right, that segment has been slightly muted. We did see a degrowth in fans and lights. We're already in the month of October. So how is the demand then looking like going ahead? Because slowly, steadily, you'll see the winter season come in as well.
So we have two types of B2C businesses. One is retail buyer. And as you would have noticed, there is a fair amount of uptick in real estate development. We believe retail buyer will continue to register a fair amount of growth in the quarters and years to come. On the FMEG side, we have several businesses. You have rightly mentioned we have businesses like fans and lighting. We also do switches and switchgear. In line with retail wire growth, we believe switches and switchgear businesses will continue to grow at a rate better than what we have witnessed in the recent past. On lighting at the industry level, there are a bit of a tailwinds and there's a bit of a pricing pressure. So that particular business should or could remain soft in few quarters. And fan, because of a recent change in regulation, looks like that the next season is going to be better than the last season.
Okay. And apart from this, if you see from other businesses as well, as compared to the first half and the second half, the first half of financial year 24, we've seen a 36% growth that has come in. That's overall in terms of where the wires and cable segment is concerned as well. How is that segment looking like from here on?
The demand environment for cable and wire is very strong. As I alluded a while back, government capex is strong, both at the central level as well as state level. The private capex is continuing. And you know, India is a consumption powerhouse. This is not an annual or once in a 5-year story. It's a decadal story. Cable and wire, in my view, will continue to grow at a rate significantly better than the industry growth rate or the GDP growth rate. And we, as the largest manufacturer of cable and wire, we believe we should be able to beat the industry growth rate.
Right. And what's the current quarter volume growth and what's the outlook in terms of expected volume growth in this segment, cables and wires?
In the domestic market, we would have registered a growth of almost 30% or thereabout as far as volumes are concerned. As I mentioned a while back, we are working to achieve 20,000 crore rupees of top line by fiscal 26. It's quite possible that we are able to achieve it sooner than by fiscal 26. So I would probably take you back to the guidance of 20,000 crore rupees and leave it at that. We would not be able to give you an exact guidance for the next quarter volume growth.
Okay. And overall, if you see from the FMEG segment as well, you have mentioned that you want to achieve an EBITDA of around 10%. That's the kind of range by FY26. How is the trajectory looking like from here on?
I think every quarter we should be able to improve a bit. I'll give you one example. For FMEG, we need to be more closer to the customer. And one way of doing it is investing more on advertisement and publicity. In the current quarter, we have relaunched our logo. We have carried out brand refresh. We are an official partner of ICC, and you can see us as a partner in the ICC World Cup matches, which are ongoing. We would have invested almost 3% of our B2C revenue in advertising publicity in the recent quarters, and we will continue to make those investments. In addition to A&P, we are working on premiumization, ensuring that we have products available across all the price points. I think all of these initiatives will help us in improving the top line as well as bottom line of FMEG in the quarters to come, so that we can get to 10% of EBITDA growth by FY26.
Okay. And overall, if you see in terms of future growth is concerned, how is the capex going to look like? Because clearly, the capex has more than doubled over last year as well. So where have the maximum spends happened so far? And going ahead, where are you looking at spends?
So we are expecting to incur between 600 to 700 crore rupees on annualized basis. Within that, if I were to split it, 3/4 will be incurred for capex on the cable and wire side, and 1/4 for FMEG. Within cable and wire, one of the large projects is EHV, extra high voltage. We have started working on that project, and by fiscal 26, the project will be commissioned, and it will contribute to the top line and as well as to the bottom line of the company. For 2 years, our estimate is for the current fiscal as well as the next fiscal, the annualized capex would be in the range of 600 to 700 crores.
Okay. And apart from this, if you have to look at FY24 as a whole, what's the kind of growth you're anticipating?
Generally, in our industry, as well as in the case of our company, second half is better than the first half. We believe even the current year will be the case. So we estimate that we should be able to replicate the first half to second half and then exit at a number which is going to be better than the first half actual numbers.
Okay. And my last question coming to you is between private and the government side of the projects as well. Where are you seeing higher demand, and are you seeing a switch in terms of revenue contribution or shift happening there?
That is all across. When we talk about government capex, infra, railways, and road are probably leading the pack. It is both from the central as well as state government. And similar pattern is also visible on private capex. Many manufacturing companies are trying to take advantage of China Plus One, and they are in the process of augmenting their capacity. To answer your question, I think it's a combination of both government capex, both at central and state level, as well as the private capex.
Right. So that's going to be the trajectory going ahead as well. Thank you so much for joining us on the show, Gandharv, and sharing the views, interesting conversations, and lots to watch out for going ahead. Thank you. Stay safe and speak to you soon again. So that's the management of Polycab India, clearly indicating what the capex could look like going ahead, what could be in store as well from a growth perspective, and the trajectory with regards to where the margins are concerned. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.